I welcome all of you to today's session of Visual Jforex, in which I will be continuing with the demonstration using the indicator named Variance. Let us now head to the Visual Jforex board, which has been developed by the Dukascopy Bank SA. In prior session, I had done this setup so far. The instrument subscription has been done, where the default instrument is going to be USD JPY, and the position amount has been defined at 0. Then I got these variance blocks of 15 minutes time frame, the historical candles of candle period 15 minutes each. There is one with the look back period of 1 and another is with 2. So we will be looking at the price action prior to the execution of the trade. To look at the volatility, I am also using the get historical candles, cluster of 5 candles here, and then to pinpoint the exact entry points, the 10-second historical candles as well. Loop viewer, I got these to measure and use individual characteristics of the array of data, and then to define the volatility, I am taking 10 pips as a pip value size here, and we have defined this to make sure that the other condition in which we want these clusters high and low to be at least 10 pips apart. So for that, this calculation has been done here, and also the condition is there that the variance output value should double. It should double whenever that happens. Only after that, if other conditions are in place, the execution of the trade will happen depending on the price action, the direction in which the price is moving. So for that, I'm also using these historical candles. Now, let us go back to the chart. In today's session, the sell side need to be completed. In prior session, I had defined the buy side, and also one thing which I will need to complete in today's session is this: the price point needs to be defined for the execution of the buy stop trade, which means the execution will happen above the current price for the buy trade, and for that we need to define this entry point, and also the order validity also need to be calculated. Prior to that, I will explain to you how the sell side is going to work. For any sales trade to be initiated, we need the variance value to more than double, so it can double or be more than that compared to the variance value just 15 minutes back. So we will be using this comparison and drawing the analysis there, and if the difference is in output is good enough, if it is more than doubling in the span of 15 minutes, then only the execution will happen. And for that, you will also be using the volatility yardstick to make sure there is enough of price momentum, and also to make sure there has been correction, and now this is the initiation of the price move, a big move in that respect in the direction. So for sell side, we need its closing value to be below the opening value, and the prior candle's closing value needs to be above the opening value. So that condition also need to be defined. Now we head back to the JForex board, where I will have to take the mathematical components calculation expression. Here we will need 3 actually to look at the price points, and also for order validity we will need to do the calculation. I am now disconnecting this and join it here. First we will calculate I think first we should calculate this entry point for the buy trade, and then its order validity, and also we will need to calculate the sale entry point as well. Okay, so in this we will have to take the current price, last take bid. Since we are going for a buy trade, I think using ask price will be more appropriate. And then comes the question of where to define the buy trade. So if I am looking at an example to give, I think somewhere here we have to see whether the variance is doubling or not. If it is in the span of 15 minutes, this is like 8:15 GMT, but the last historical candle, the penultimate one, had not closed in trade here. So I think here the condition won't be fulfilled. Let me measure it one more time, 8:30. So here, no, I think this time around execution won't really happen. So as and when the conditions will be in place, only then the execution will happen. And since we are looking at a buy execution above the price which is prevalent at that point in time, we will have to add some pips. And here I am adding arbitrary, like 2 or 3 pips should be good enough. So you can always make your own mind regarding this, and the price difference which you feel is good enough, you can define that many pips and add to the last tick ask. So first we will need to calculate the pip difference. For that, the default instrument pip size needs to be taken into consideration. Okay, I will take default instrument pip size, multiply it by 3 pips. So I will have to create a new variable. This will be entry point pips. This is going to be 3. Okay, and this will be a1 into a2. So by cell entry point, entry pips actually, not point, and we need to add this to last tick ask. So this is going to be a1 plus a2, and this will be by execution price. Okay, so now we have this price, and the order validity needs to be defined. Since we are working on a 15 minutes time frame, I think order validity of 15 minutes should be good enough. For that, I will have to look at the last tick time. So this is last tick time, and to that I will have to add 3.6 million ticks divided by 4. In a 1 hour, you get 3.6 million ticks, and to arrive at the 15 minutes, we will have to divide 3.6 millions by 4, so that works out 0.9 million and 900,000. Define it anyways. So instead of carrying out multiple calculation, I will straight away use the 900,000 value. for the order validity. Nine followed by 5 zeros. So this will be A1 plus A2. And now here we have to pay attention to the data type for this variable output value, and we need it in long data type. So I will create the variable itself there, and we name it OVT. Okay, and its output value will be the result of this calculation. So that looks good now. I will join this where it belongs. This is candle 22 being compared to candle 19, and then candle 23 compared to candle 19's closing value. So I will have to look at what the candle 23 is about, and this is with the look back period of 1, which means we will need its closing value to be above candle 19's closing value. So first input greater than second input. So our buy side is now defined. I forgot the slippage, which should be good enough. And also I need to define the stop loss and take profit. I think working with the 20 pips stop loss is not really a good idea when we have defined the algorithm for the 15-minute time frame mostly. Down to 5 pips and 10 pips combination to get us the risk reward ratio of 1:2. Lot amount is going to be 0.1 million. Alright, now one more calculation expression for defining the sell entry point, which is going to be below the current price, equivalent price at that point in time. So we take last tick bid and add, not add, deduct the BSEP value, which we have defined. We haven't really defined it, we need to provide it value 3 pips. Okay, now it is defined. Oh, we have done a mistake here. I think we don't really need to do anything here. EPP has been defined and EPP carries the P pips value. Okay. Let me check it once more. Okay, now this looks good. And for sale, the execution will happen below the prevalent price. For that, it will be A1 minus A2, and this will be sale execution price. Now I will join this. Okay, so we are mostly done with the buy side requirements. Now it's time to define the sell side logic, the conditions for the execution of the sell side trade. We want the variance value to show a spurt, and for that we will be comparing the last 15 minutes variance value with the prior value. Taking a bit of time here. This log is not going to work. I think there is some problem on the platform again. There is connectivity error. Wait, okay. Now let me try one more time. Info logical. Alright. If else block. And last 15 minutes variance value, which is out 14, needs to be twice of out 15 or more than that. So this RVV will be compared with out 14, and I will get this equals block. First input greater than second input. Okay. Now we want last historical candle, which is candle 19 to closing rate, that is its closing price being below the opening price. So we will look at the candle 19 opening and closing price. Its closing price should be below the opening price. First input less than second input, and the penultimate candle, which is candle 20, which has a look-back period of 2, it should have closed with gains. So we need candle 20's close to be above its open. So we will do first input greater than second input. Okay. We want enough of volatility, enough of momentum in the price action. For that, I have looked at the actual high and low difference and the minimum requirement is 10 pips. So APD will be greater than EPD. Once these conditions are in place, we need to look for the price to start declining below the last 15-minute candle, and for that we will be doing the comparison. First input greater than second input. Now I will have to look at candle 23 and candle 22's closing values in comparison of candle 19. And candle 23 has loopback period of 1, whereas candle 22 has loopback period of 2. So we need candle 23's closing level to be below the candle 19's close. First input less than second input, and candle 22 candle close should be above the second input. Now we will take all these blocks which we have used to define the requirement for the execution of the trade. Okay, so here we are almost done now. All we need is the pending open order for the sell side, and then we will also have to define its certain parameters for trading component. This should have been above the candle 19's close. First input greater than second input. For the sell side, we need the sell execution price, which we have already defined, which is going to be below the prevalent price. Lot amount 0.1 million should be good enough. You can always change it depending on the equity size of your account. Stop loss 5 pips. And take profit of 10 pips to make sure the risk reward ratio is at least 1:2. And comes the question of order validity. I think there has been some group up, so I will have to remove this and look at the OET, order validity time. Okay, now match filter. Same orderability will be for the sell side as well. And this is going to be sell stop order. We now have defined the buy and the sell conditions in a symmetric manner. Okay, now I will have to join the sell side to the multiple action, which is going to get the trade flow moving. I will color code this just to make sure that everything is in place. I think something is wrong, so because of this color coding, I can immediately recognize this connection is missing here. So whenever you design and develop the algorithm, you should double check it just to be sure that all the conditions have been defined just the way it needs to be defined as per our logical requirements, and then the trade flow is happening. That's it from my side for today's session, and I hope you have been able to understand how this algorithm is going to function and what has been done to achieve the requirements of the logic on which we want the trade execution to take place. So that's it from my side for today's session. If you have any idea or any query, you can write to me in the feedback section and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. Goodbye.